All right. So, on behalf of the Mass Mortgage Bankers Association, I would like to welcome everyone to today's automated asset program. And I would especially like to thank our panel and our moderator. I am going to turn it over to Sarah, but for introduction. But Sarah, thank you so much for not just being moderator today, but also being on the education committee and actually coordinating this whole program. So thank you so much. And I'm going to turn it over to Sarah.
Good morning. Thank you, Debbie. Good morning, everyone. Thank you for joining us today. Today, we're going to talk about automated assets. So the use of technology and digital solutions continue to evolve in the mortgage industry, and implementing the use of technology can help the lender and the borrower to create efficiencies, reduce costs to originate, reduce time to close, offer rep and warrant relief, and overall improve the customer experience. We have a great panel of speakers today, thank you, who will discuss and review automated assets, how it works, what does Freddie do with the information once they get it. Maybe you are or not using the technology or using it to its fullest potential, and how should you build it into your process to get the most out of it. We have informative research here, commonly known as their product account check, review how it works. Freddie Mac will review how to use their data, followed by a Q&A, panel Q&A session, and then we'll have a Q&A session from the group, from the attendees. Okay, so we'll take a moment and introduce ourselves. Debbie introduced me. My name is Sarah Ruder, and I will be your moderator today. I am a member of the MMBA Education Committee. I would like to thank Debbie Souza and the Education Committee for all they do to bring us these webinars. If you have any suggested topics that you would like the Education Committee to put together, feel free to email myself or Deb Souza, and we'll be happy to look into that for you. Panel, if you could take a moment and introduce yourselves, give us a brief description of what you do and how you relate to our topic today. Cheryl, if you'd start.
Good morning. My name is Cheryl Hoover. I am the Client Success Manager with Account Check by Informative Research, and I support our client relations. I conduct trainings mostly on our products, so that includes the verification of asset, and I help them build efficiencies for the lenders to not only build efficiencies into their processes, but to increase their production too. So I'm happy to be here. Thank you for having me.
Thank you. Brian Francis.
Hi, everybody. I'm Brian Francis. I'm the head of Account Check for Informative Research. So 15 years ago, I led the creation of the world's first automated account verification program, Account Check, and led its inception through both granting of acceptance as a replacement for bank statements, and then integrations into the automated underwriting systems of the GSEs, growing it beyond just asset, but now for the use of using the bank data for evaluating income and employment, for doing 10-day pre-close verification, for validating rental payment history, for using it in cash flow underwriting. So Account Check was acquired by Stewart Title and Informative Research in March of 2003. So lead a team of about 20 people that came over from the previous company and continue to deploy the solution, and have been a big supporter of it. And I feel like I now have closer ties to the Mass MBA, since my son is a rising junior at a college in Boston. So have close ties to Massachusetts. Thanks, Sarah.
Thank you, Brian. Louis?
Thanks very much, Sarah. My name is Louis Perez. I'm on the loan products team here at Freddie Mac. We're responsible for lots of innovative loan products, but I'm in charge of our AIM product, which is automated income assessment, and a bunch more, which we'll talk about in a moment. I'm excited to be here. I think the journey that we've gone with the asset report, which is the topic of this webinar, is a very exciting and great example of kind of where tech has helped the mortgage industry. So excited to talk about all that. Thanks.
Excellent. Thank you. Brian, the other Brian.
Yeah, how you doing? Good morning. Thank you for having me. So Brian Brown, Guaranteed Rate Mortgage. I've been originating now for 20 years, and I absolutely love account check. Use it every single day. Can't imagine my life without it. Remember the world before, and it was not as awesome as it is with account check. But yeah, excited to talk here in a few minutes. Live in Hopkinton. I'm a Bentley guy, so if anyone has Hopkinton or Bentley connections, reach out.
Thank you, Brian. My father was a graduate of Bentley, so thank you. And Eric.
Thank you all. My name is Eric Prue. I'm a co-chair of the MMBA Tech Committee, and I also lead all of our technology at Leader Bank in our mortgage division. And we've been leveraging asset verification for just about 4 or 5 years now, and we've seen tremendous benefits in our organization. And so we're excited to talk to you about it here today. Thank you.
Excellent. Can't wait. So first we will start with Cheryl, who will go over account check and how the automated ASM system works. So thank you, Cheryl.
Thank you. I'm actually going to take myself off video and go ahead and share my screen. It'll take me just a moment to get the slideshow up and running, so bear with me here.
Perfect.
All right, wonderful. So today, as everyone has been talking about, we are talking about the verification process for our loans using an automated asset statement. But before we discuss the how of the VOA works, as Brian had mentioned, let's take a minute to discuss the why. Can you all hear me okay?
If not, I have to pick River up at 3 and then I get back.
Yes, I can hear you.
Okay, perfect. So obtaining an automated verification of asset is no longer just to replace bank statements, right? I think in the very beginning, when this came to be, it used to be basically to replace the asset statements for a borrower for your loan. But with the new GSE initiatives, this one report can now meet multiple requirements and reach the underserved community. So let's talk about just a few of the benefits and what we call the power of one report. So capturing and retaining borrowers up front, very important for origination staff, right? If you can capture and retain them right up front, that is key in maintaining those loans. Obtaining asset documents early in the process for a quick pre-approval. When you can obtain the verification of asset, and especially all of the capabilities that it has up front, you can do a pre-approval and capture that loan within minutes of them sending that back to you. The ease of the process, not only for the lender, but for the borrower. And we'll take a deeper look at all of these things as we go through our talking points today. Help to avoid fraudulent activity. The borrower does not have the ability to alter the document in any form of fashion with this verification of asset. Obtain AUS validation for income, employment, assets, rental history, and cash flow analysis, just all simply from the bank data. And close loans faster. That's key, right? If we can save time in underwriting, and you can even use junior underwriters when using the validated findings, then you're able to close loans faster. How it works. So let's take a look at that. Digital verification of assets, right, eliminates the need for the borrowers to collect basically all of their asset statements, and it covers checking, savings, retirement, and investment accounts. But the key to having success in this is having that upfront conversation with your borrower on what to expect. That truly is key. Explain this is just part of your process, and you can even provide them with a walkthrough of what the process will look like. But I'm telling you, the pull through and the borrower conversion on this particular validated tool it really is key that you're having those conversations up front so they know what to expect. And you have to understand the process yourself and believe in it so that you can talk to your borrowers about it. The asset information for the loan application is collected directly from the borrower's financial institution. It's simple, accurate, and secure. So the consumer permission verification of asset, it doesn't involve any paperwork or unsecure measures of document uploads. The borrower doesn't have to fax, scan, simply send anything to you. All the required data is shared instantaneously via the API. The borrower simply shares their asset data. So either from your POS or your LOS, you are creating the order, and that is going out to the borrower. They receive an email and or text with a secure link to the login. They authorize and link their accounts. And by doing so, those statements and that data is pushed back into your system within minutes of doing so. So I know that sounds really simple, but it truly is an easy process for them to walk through. Once those come back, a digital report is produced. These highlight key data required for your loans, such as direct deposit of payroll, Social Security income, child support, etc., along with displaying the history of data that the financial institution provided. Okay, so we're always going to take as much data as they provide to us and put it into this standardized report. The GSEs will be able to review that data behind the scenes. And I know you can't see it on this snippet, but it does say the history available. And that's what you're going to take a look at for the amount of days of data that's provided that the GSEs will see in the background. And I know that Lewis is going to get more in depth about that as we go through this. So all financial institutions that the borrower provided to you are going to seamlessly flow on one report. Okay, so they'll show up front all of the reports and the balances. Then it will show direct deposits, all deposits, and then break each individual financial institution down as it proceeds through the report. Okay, so once you get used to reading these, it's an easy flow for the originators, for ops, for underwriting to review and to follow. So the report ID from the verification of asset goes into your system, into the GSE form. And at that time is when you would run your AUS. So the GSE completes an analysis of the income based on the direct deposit patterns, right? And they're also at this time going to look at the long history from the verification of asset, and that will reflect on the findings if assets, rental history, and any cash flow analysis can be validated. So the verification of asset can be used to substantiate assets even if they're not validated. So that is key too. Even if you're not getting the validated findings, you can still use the verification of asset for your asset statement. And this just shows how the borrower information is safe and secure. Bank level security, it's a read-only product. It is kept very private, safe transactions, and it's a one-to-one connection. And 24/7 security monitoring. So this completes my section of the verification of asset.
Great. Thank you so much, Cheryl, for that. Lewis, you will take us through what Freddie Mac does with that data once they obtain it.
Yes, thank you very much. So Debbie, I think you're going to share the presentation here. And I'm also going to take myself off camera to focus on this. And so Freddie Mac, we've been on a journey. Let me just get as we start sharing for integrating technology into the mortgage process. Our automated assessments have been around for a few years now, and we've kind of grown. And the asset report, as I mentioned, is a really good example of somewhere where we started at one place that was very simple, straightforward, as Cheryl mentioned, verifying assets. And now we've gone to other places, which are innovative and make sense, actually, from just common sense and from the data that we have. So our tool that we use is, if you want to go to the next slide, Debbie, is Asset and Income Modeler, AIM. This is our automated assessment of assets, income, and employment. And what we do here is that we look at this verified third-party data, as Cheryl mentioned, that they're getting from institutions, and we're able to assess a bunch of stuff, income, assets, and employment, and also a few other topics, which we'll talk about in a moment. Key to this is the asset report, right? Because it's so versatile. And what we're going to find a lot of benefits associated with this. Cheryl went through her benefit, but from a Freddie perspective, let me just kind of give you what we think is the benefit. Get a slide 3 for me, please. From a borrower perspective, which is super important, of course, it's faster, less paperwork. So the idea is that it's hassle-free. I think that's definitely an expectation now for borrowers, that technology is integrated in some way, and at least make it less cumbersome, the process. Loan officers, of course, get faster cycle times if everything is done in an automated fashion. Processors and underwriters get fewer documents to review. And from a risk QC perspective, which is super important for, I know you all, and from our perspective as well, where they're leveraging the data from third-party sources, right? So you're looking at the decrease of, fraudulent activity, and also you're getting Freddie Mac's upfront view of it. Well, how we started this journey from a QC perspective is we wanted to codify our QC findings. I wanted to bring that process up front. So instead of doing spot checks at the end, which might frustrate you or us as well, we would bring an automated tool to bring those QC practices up front. So I think that's a win-win for everyone. From a lender perspective, there's going to be reduced cycle times. And then there's limited reps and warranty release, which we'll talk about here in a moment. And also some automated kind of jobs that you all do now that we think we've kind of taken care of for you, which I'll go over in a moment. Next slide for me, please. How it works from a Freddie perspective, to piggyback off what Cheryl mentioned, you all order that report, then they're going to give you report ID. That report ID is going to be submitted to LPA there in the center there. And then you're going to, and instantaneously, with that submission, we're going to give you results back in a feedback certificate. The feedback certificate has information about reps and warranties. From an income and asset perspective, you may be eligible for. There's a big shield that says eligible or not eligible. And then the feedback messages, which are very important to our product, tells you exactly what you're getting the reps and warranties for. Now, key here is that the amount of data, as Cheryl mentioned, which you can see on your report from account check, is not necessarily what you all get. In fact, you all can order the exact same amount of history that you would order as far as your normal process, which is 30 to 60 days. And we will assess a lot more, up to 2 years even. But that doesn't mean that you all have to look at it. And that's what I think is key here. And I think there's a lot of misconceptions about that. So you all order and review the same amount, and we will have a longer history to make more intelligent assessments, and we will return those results back in the feedback certificate. Okay, next slide. So Power of One, you heard Cheryl mentioned, it basically is the versatility of our asset report. You're verifying funds to close, you're verifying income through direct deposits. We're actually expanding who can get a mortgage. This is super exciting for us. We're looking at this history, transaction history, and able to see extra insight there that we did not get in a normal credit report and a normal risk evaluation. And that helps us actually qualify more borrowers through rent payment history and something we call borrower cash flow. We'll get to some details in the next slide on those. But the last one I think is also really important, verifying employment, that 10-day pre-closing verification. Right before you're about to close, you want to make sure the customer is still employed. You can do that through the asset data, the transaction data. Okay. Next slide there. So these are our products and functionalities, but it's the same report, but we're just looking at it a little bit differently. So on the left there, you have our aim for assets. That is the sufficiency of funds to close. There we're looking at checking, savings, retirement, money market, investment accounts, all that to get a picture of whether there's enough funds in order to cover the total fund to be verified. And if there is, we calculate that for you, and we are able to give you reps and warranties for that amount and also the integrity of the data because it's verified data. Key here to talk about the steps eliminated for you all are collecting of bank statements. You no longer have to do that. We can calculate the assets for you. We also identify large deposits, and I think we do this in a smart way where we really only message ones that you should go and verify. There are some large deposits that may not matter. You may not need them, so we'll back them out first. I think that's smart of us. And then even when there is a large deposit and you do need that amount, we want you to get a little more information on it. We're very specific about what we're asking for, and we'll tell you exactly what you need to source. So you're not going out having to source a number of large deposits. We'll say this is the one or two that you have to source, and then you'll be able to use our messages to pinpoint those. And then your post-closing QC review. If we are getting representation and warranty relief, that's something that you no longer have to do. Our second one there is our aim for income using direct deposits, and that is assessing the income using the direct deposits, and specifically from wage income across fluctuating and variable income, base, bonus, overtime, commission. We'll assess those from wage. Then some of the retirement, Social Security, and pension, and we'll also do military, and then even child support, alimony, and VA disability. All that is in scope for us. We see it in the direct deposits, and we'll assess it. And if we are able to assess enough for representation and warranty relief, we'll give you the accuracy of the income calculation as a rep and warrant, and also the data itself because it's verified data. What we're eliminating for you having to do is deriving that income and collecting pay stubs and W-2s. This is that idea of making it super easy for the borrower. We're just having to use the asset report. We're not having to go back and ask them for anything else. And then, as I mentioned before, on the last one, it will continue the post-closing QC review. Aim for employment is that 10-day pre-closing verification right before they close. We'll also do that through the direct deposits. And we do that for the applicable incomes, the wage income and military. And for that, you're going to meet the 10-day pre-closing verification. There's no rep and warranty associated with that yet, but we are verifying employment for you, so you don't have to do that step. And we don't have to do the post-closing QC review. I think for that one, an important one also is that much like in when you're talking about payroll, there's this idea that there's a way to verify employment with what I'm just going to nickname kind of a skinny verification of employment report through the deposits. And what this is us able to look at just deposits that are recent and just make comment on the employment. So basically what I'm saying is that once you get to a point when you're ready to close, you can order a new report, a skinny report with just deposits for us, and we'll be able to verify employment through that report. You don't need a whole reevaluation of assets or income. And that's, I think it's an advantage for us, but I think it's a tool that we want folks to use more. Last one there is borrower cash flow and rent payment history. There we do look at checking, savings, money market, and investments in order to be able to get that extra insight into how the borrower is managing their finances. If you go to the next slide, it has a little bit more information, I think. Gives you more insight there. The way we're looking at this is from a rent payment history perspective, that's for a first-time home buyer. That's the one on your right. So that helps us understand, is the borrower making on-time rent payments? Because that is typically not reflected on the credit report. So they're not getting the advantage of that financial management that you're doing. So if you're a first-time home buyer and purchasing a property, you're going to be able to get the benefit of that. So what that means is that a loan that would normally be a caution, so would not be acceptable as a Freddie Mac accept loan, we can flip over to an accept. So from a caution today, it would be an accept with that extra insight. But the asset report is crucial for that, right? Since it's not on the credit report, the rent payments coming out of those accounts is what the asset report is going to be able to give us insight into. And if you do, then you get basically our qualifying more borrowers, right? Where a loan might have dead-ended into a caution, and that might have turned into a manual underwriter, or just might not have proceeded. Here we're turning that into an accept. While that is limited to first-time home buyers, the one on the left is borrower cash flow, which is open to all borrowers for all loan purposes for any kind of property, primary, second, and investment home. And what that is that we're looking at that up to 24 months of transaction history and looking if there's inflows and outflows that basically net positive. Do we see positive patterns there? And if we do, that means you're financing, that means the borrower is managing their finance as well. And that extra insight gives us that extra confidence that we can take what it would be a caution and turn it into an accept. Again, qualifying more borrowers, super important for us. The next slide, there's one more point about this that I think is super important, and it kind of aligns with what I said about our messages being important. When you use an asset report, when you already have submitted an asset report, your account check for instance, we will automatically assess for cash flow and rent payment if it's an eligible loan. And an eligible loan would be one that would be cautioned, but could flip over to an accept. We will automatically do that for you. And if we find rent payment history, consistent rent payment history, positive cash flow, we will give you the benefit of that and flip that over to an accept. It will never hurt you. I get that question quite often. Will the assessment kind of go the other way on you if we don't find positive cash flow? No, it only will positively affect. So we'll review the asset report, we'll either give you the benefit or we won't. Now, if you don't have an asset report, our messages are smart enough where if you're an eligible caution loan, we'll message and saying, hey, you should order an asset report because you're really close to an accept and that might make the difference. So please go order an asset report. And as of a couple of months ago, we actually moved that message all the way to the top of the caution section of the feedback certificate because we think it's that important, right? That avoids you having to restructure the loan or think of other ways in order to kind of get to an accept. The verification report will allow you to do that, we're saying. And then I did want to go to 11 really quickly. I know it's in the appendix, but since I had a moment here, I think a best practice here goes to the theme that Cheryl mentioned about getting your bar prepared. That's slide 10 or 11 after the appendix. It is a mind shift, and it is not intuitive for a bar, at least it's not, I don't think it is, for them to give you asset credentials and then to get more than just an asset assessment. Because of that, we really have to coach the borrowers, help them understand in some way the why of this, right? And that is all advantage to them. I was recently reading an article, and it was an opinion piece about somebody who was renting in that case, actually. And they were trying to get verified by the company to rent. And they were asking for their credentials to verify their income. And the opinion piece was, what's going on? Why are they doing this? That doesn't make sense. That just goes to show you that it's not intuitive. This is a fairly new use case to be able to do that with the asset transaction data. So we do have to educate still. And along with that, that means that as a best practice, we want all the asset reports you can give us. It's not just your savings account to cover you for your down payment for your purchase. It's all the bank accounts that you have that help us form the best financial picture of you, where you get your direct deposits, of course, I mentioned earlier with the income, where you're paying your bills out of, where you're doing your day-to-day transactions, and your savings and investments. So versatility, power of one. That's kind of the message here from us. And with that, my section is done here.
Are you all set, Louis?
Yeah, I am. Thanks very much.
Okay, thank you so much. Thank you, Cheryl and Louis, for your presentations. I thought that was excellent. I do have some technical questions, actually, based on your presentations. I have a few questions. I know that this may be different for different automated asset vendors, but are you able to reach all financial institutions?
Yeah, Sarah, That's a great question, Sarah. Yeah, so I mean, our coverage continues to grow. When we first started the program, our target was 100%, and we've reached over 98% of custody deposits in the United States. And if you think about it, the same types of access that allow consumers to hook up their Cash App or PayPal or Venmo accounts to their bank accounts, those same types of technologies are what allow account check and other asset providers to be able to retrieve information from the bank accounts to provide it to the automated underwriting systems. So banks that don't provide this type of asset are at a serious disadvantage from a customer perspective. And I would say over time, the number of requests for, hey, can you support this institution, have almost dwindled to zero that come into our help desk.
Great. Can a financial institution stop you from getting the data?
Again, that's the same thing. Is there's no way for a financial institution to say, well, we're going to block account check, but we're going to let Cash App and Venmo come in. So
Okay.
when they do that, they're not only hurting their customers, they're actually in violation of the CFPB Rule 1033 regulations, which were part of the Dodd-Frank Act passed in 2010. It's taken a long time, of course, for rulemaking to come into place, but Section 1033 requires that a financial institution provide their customers with access digitally upon their consent to the bank data.
Great. One more question for you, account check. Obviously, multi-factor authentication is more prominent these days. How does one, when they're signing in, when they're going out and signing in and providing their user ID and password, how does multi-factor auth work with account check? Does it prevent somebody from signing in? Do they have to go out to their bank and do something? I'm just speaking, I think, from experience from years and years ago when when automated assets first happened.
Well, bank connectivity is really evolved over the years. And what you saw originally, I would say 20 years ago, 15 years ago, when I started in this space, is you saw the banks and the data access technologies as working in opposition to each other. So the data access would come in through the back door, come in through the side door, not really known to the financial institution. But what has happened with the growth of industry standards like FDX and the open banking initiatives? You've seen it very prevalent in Europe. You've seen it also prevalent in Canada. Now, the US is a very different banking environment with probably 9,000 to 10,000 different depository institutions as opposed to 7 in Canada. But what you were seeing is that the banks and the consumers of the data, the account checks of the world, are now working in a closer partnership. So over 70% of our connections work through what's called a modern banking connection, or what other people in the industry know as OAuth. So in that, we are actually operating in partnership with the bank. So if I'm going in to connect to my, let's say, my Wells Fargo account or my Bank of America account, it's actually a tokenized connection where my credentials are either stored on my phone or in my web browser, and I'm logging directly into Wells Fargo, and I'm permissioning access explicitly for account check to be able to access that data. And so all that account check gets back is a token for that connection. And what that does is, one, of course, there's no credentials that are being exchanged, but two, that token is a valid connection for the life of the account check order, which means that if the lender comes back and says, hey, I need to get an update because I need to run that 10-day pre-close verification. I want to run a 10-day PCV report, but I need to go back and I hit the bank account to refresh the data. That token is still valid. Now, in the case of financial institutions that don't support that yet, and we have over 700 institutions in our platform today that support it, and that's continuing to grow on a daily basis. But account check was always developed from the beginning to be able to support that refresh capability, which means that if we reach out to the bank to refresh the data and the bank comes back and says, hey, I need you to answer this security question, an MFA, or I need to send a token to your phone, we have the ability to engage the borrower directly. We'll communicate with the borrower. We'll bring them back into the process. They can very quickly validate that connection. and that allow us to pull the data down and to generate the information. And that has really grown to become an industry standard. So AccountCheck invented the concept of refresh, but other asset providers do provide a similar technology. But the goal with the open banking and the modern banking connections is to eliminate that need for future borrower interaction during the origination period of the loan.
Excellent. Sticking with the 10-day pre-close question to Lewis, you had mentioned I think you called it a skinny report, that you wanted the deposits to come back, to verify employment. I was curious, is there a special product for that to just obtain that data? If you're looking for all deposits, does that mean that now we're going to have new large deposits that are going to have to be addressed during that 10-day? I don't know who wants to answer that question, but
I think from a
Lewis.
product perspective, I'll tell it in general, and then Brian, you can probably go into your specific product. But the idea is that really we're just looking at the payroll deposits. We're not looking at deposits, more recent deposits that, your regular debits and credit. We've done that piece of the process already. This is just for verifying employment, which is super similar to the way the payroll world works, right? You do the VOIE, the verification of employment and income, and then when you get towards the end, you do just a verification of income. And I think that I have a share screen. So Brian, if you want to take it away, I think.
Yeah, so to exactly to Lewis's point, and this is something that both Lewis and Cheryl touched on earlier, is there's both the data that then gets delivered to the automated underwriting systems, to LPA, and then there's the report that the lender can actually view and put in their loan file, put in their e-folder. So what we've created is what we call the digital verification of employment report, which is our digital 10-day pre-close verification. So as you can see here, what it's showing is when the deposit is coming in, where it's coming from, and then what is the description line. But if you notice, the field that's not being shown here is how much that deposit was for. So that's where the lender doesn't have to worry about seeing a large deposit come in or even seeing a change in income. What this report is designed to do, and it lines up with the analysis that Freddie is doing, is am I seeing that paycheck? So you can see right here at the top, there is a payroll deposit directly into this account that matches the previous payroll deposit. So now you have both the documentation and you have the electronic certification from the automated underwriting system that this person is still employed and cleared to close.
excellent. Thank you. Brian Francis, I'm going to stay with you one more time here on another question. With the increase in fraud, how is using automated assets more secure than the customer providing bank statements?
Well, it's completely more secure. If you look at what's on your bank statement, you have things like your personal address, you have full account number, you have your full routing number. You basically have everything that a potential fraudster would need to be able to do to pull money out of your account. You also, as a lender, if you're receiving a PDF of a bank statement with tools like Adobe Acrobat or even online tools today, the ability to manipulate a PDF file is very easy. So my $5,000 balance becomes a $25,000 balance. And there's no way for that lender to verify that the data is accurate because it looks like the exact same bank statement that they would have gotten directly from the financial institution. So by getting the data digitally, by encapsulating that data in a digital package that moves directly from, and this is one of the key differentiators that asset vendors like AccountCheck provide, is we will give the lender a copy of the report. We can actually provide the underlying data in the report in a JSON data format to the lender. But when it comes time for the lender to share that information with the automated underwriting system, all the lender is providing is what we call the reissue key or the report identifier. No data is transmitted from the lender to the automated underwriting system. The AUSs have direct connections into the asset providers based on that report identifier to be able to retrieve the data guaranteed unchanged.
Excellent. I actually have a quick fraud story regarding a PDF possibly, but prior to automated assets, we had a bank statement provided, and we post-closing, it was re-verified, and they came back, the institution came back and said this customer's never had this deposit. And we looked and we looked and we trying to see, but it was so good, we had no idea. It was not a loan sold to you, Freddie Mac, but we had no idea that was that good to be able to undetect that. So yes, that's a great process to avoid that. And of course, you get every page, right, for the customer providing, excuse me, automated assets providing you the bank statements. You don't have a missing pages of bank statements, which used to be a tough call. Brian Brown or Eric, I have a question for you. How does using automated assets impact the customer experience?
I'll start. So for me, it's the biggest no-brainer in sales, right? It's so much easier for them. So there's really, in my opinion, right, there's sort of two borrowers, right? You have your current homeowner who very likely went through the regular PDF process years ago when they bought their current home. And so one of the things that I do up front, if they're a current homeowner and they're, upsizing or downsizing, whatever they're doing, say, hey, do you remember the last time when, you bought the house, you had to provide the PDFs and multiple times, and, oh my God, yeah. And I sort of bring that up. You don't have to do that anymore, right? It's super simple. We have incredible technology that will do all of that work for you. Just need to give us the authorization, and we'll go in there and we'll get exactly what we need. We don't need to bug you for any of that. And then the new buyers, your first-time buyers, it's sort of a different conversation. It's they half expect something like this. They don't know what it is, and it's sort of the same thing, right? Where they expect the automation. So hey, we have tools here that are going to really help speed the process up. We can go in with your authorization, get the information that we need. So I don't bring up the pain points because it's not even going to register to them. But I just give them the tech that they're already expecting. And really it's all about how you phrase it, right? And how you present it to them. If you're excited about it, they're going to be excited about it. And we really don't give them any other choice. This is what we're doing. And it works out. It works out every time. We're trying to help them help themselves. And this automation is hands down the way to do it.
Brian, if you
just to add,
sorry, go ahead, Eric, please.
Yeah, thank you. I was just going to add on, Brian did an excellent job explaining that. I think also the other benefit is in the speed in being able to get back to them if it's a pre-approval or what they're going to experience throughout the loan process. If they don't need to go back out and re-verify those assets by providing you documentation, everybody knows, what that was like with paper documentation and making sure there was no gap and explaining to clients exactly what you need to get and how much confusion that could cause in that process. I think the ability to refresh the assets later down the line in the loan, they may not even realize it, but you're saving them time and effort in what they're going to have to do during that process. And I've just add one piece. I think it's super important to make sure that your people are understanding on how to leverage the tools. If reading the AUS messaging. So it's something that you want to coach not only with your upfront sales, your loan officers, and make sure that you have that integrated in your point of sale system, but downstream in making sure that all team members are bought in and understand how to leverage it so you're getting the most out of it.
Yes, great, Eric. I'll stick with you for a moment. And for those on the call that may not be using automated assets, what suggestions or best practices would you have for implementing automated assets into the process?
I would definitely think about systems, process, and people. From the systems, what tools are you going to leverage? And then where are you going to put that into your process? I think there are different points in your process where you can kick off the asset verification. I think both of the GSEs have opinions on where you should start. At Leader, we're doing it in our point of sale system. We want to get that information as early as possible so that we are getting as much information, and we're not going to have to go back to the client continuously for updated documentation. So for us, I would think about, or for you, I think about where you're going to deploy in your process. Then you want to think about your people. How are you going to train them? how are you going to have them pitch it to the client? Make sure that you're leveraging it within your process and you're not getting the benefit up front, but then you're still kind of reverting back to the old school way of verifying assets once it's in processing or in underwriting. And then I would watch closely after implementation, the adoption. Are there team members or teams that are super users? And if they have an unusually high, or they're much higher than the benchmark within your organization, leverage those success stories and share out what's working with the rest of your teams. And then for the teams that are not leveraging at all, have conversations, find out why. Everybody hates change. They might not understand it. They don't know how to talk to their clients about it. So that's how I would think about it. It's just the systems, the people, and your process.
Great.
Sorry, if I can add one thing to that. Understand that loan officers like me are using this to sell against companies that aren't using this, right? So in this world, you work very hard to get referrals. And the shopping, because of the rates the way that they are, the buyer psychology is that I need to fight for every penny, and then they're going to shop, right? So being able to say, like, hey, listen, one of the advantages that in my case Guaranteed Rate has is that we have automated asset review, automated income, so that you're not going to need to provide most of the stuff that you're going to have to give other companies. A lot of companies don't have this. It's going to be a lot of legwork, right? Where we can get all of that automated. And so you sell, everybody talks about rates and closing costs and all that sort of stuff, but it's speed and ease, right? Everybody today is busy, everybody. And so if you could take a majority of that work off their plate, that may be enough for you to win the deal. So just understand that, I'm using this as a tool to sell against you.
You took the words right out of my mouth.
All right, sorry.
No, that was great. Brian Brown, if you do have a customer that is struggling, I think that sometimes when a borrower hears that I have to enter my user ID and password, that they get nervous with all the fraud going on these days. How do you talk to your borrower about overcoming that fear and the security of the system?
Yeah, so if I'm being totally honest with you, I don't. It never comes up, and which is great. Truth, to be totally honest with you, I don't handle any income, asset, credit, like the way that GR works, our process. Like my team handles all that stuff. They never come back to me with, hey, we got an issue, you need to call the client, because they were nervous about security and all that. But anyway, I think one of the things that I do up front that may alleviate all that is before the client is even applied, I basically walk through, like, hey, when I'm just talking about what their goals are, and they tell me what they're looking to buy and all that sort of stuff, and we say, okay, well, the next step is you're going to fill out an application. Everybody applies online these days. They hardly ever do over the phone apps or come in. It's almost all fill out a link. So they fill out the link, and I say to them, the application is going to walk you through your income. We do a soft pull on your credit up front, and then your assets. Right now, one of the greatest thing about the asset piece is you no longer have to provide PDFs and all these bank statements. You don't have to do any of that. If you could just provide your credentials, which is 100% safe, like we don't see your credentials, I don't have access to do anything. It basically is just going to authorize us to extract the information from your bank account information that we're going to need. It's 100% secure. It's encrypted. I go through all that. It just basically you get the buy-in up front, and I can't, in the last 5 years, I can't remember anybody that had an issue with it.
Excellent. So setting expectations up front is key to that, to offset that. Excellent.
Sarah, can I add just one thing to that? Basically, if you can make them see one way or the other, you're going to your online banking, whether it's through this link or you have to do it yourself and then download and, scan and all of that. It's the same. You're going onto your online banking, period. Okay. And a lot of times they just don't understand that. So kind of keeps it key.
The other day, I actually was linking an investment account to my banking institution and actually used another asset verification provider's technology in that process. It was layered in. So, I was verifying my account and that the ownership and that I could actually move the money between the accounts. But then it was interesting to see that was the same technology that we're using in the mortgage industry to verify asset documentation.
Cheryl, do you have any tips for the loan officers that you can provide their borrowers when they are having difficulty accessing their accounts?
Well, like Brian was talking about, the only time that really comes into play is maybe they chose the wrong financial institution, because some of them do look a lot alike, right? There's a lot included. So if they're typing in the name of their financial institution, if they don't see it on the icons right away and they're typing it in, less is always better. Because as soon as you start typing in, say, Wells, it'll bring up everything that's included for Wells. So if they're having trouble, originally go back, maybe try to find the actual correct one. And if for some reason, when they set up their original account with that financial institution, maybe they did do, a multi-authentication, and they do need to answer an extra security answer, like they set it up originally, right? Because you're going to that online banking, or maybe you do have to have a code sent to your phone. But really, those are the only reasons.
Yes, I have seen that before, where like you call up Bank of America, for instance, and they have like 5 or 6 different, because they have private banking and they have all sorts of, so it's selecting the correct
That's right.
institution to get your information. Lewis, I know that Freddie Mac recently published a cost to originate research paper that shows costs have risen 35% since 2021. And the impact on technology is lowering costs and cycle time. Could you share some key findings as it relates to today's conversation about automated borrower financials?
Yeah, but I think it's very applicable. I mean, when we looked at the last cost to originate study was in 2020, and the average cost of a loan has risen by $3,000 per loan. So the question is, why is that happening? Well, we have inflation, we have the production mix is really now more purchases, and purchases are more prone to defects and errors. And so when we talk about one of the benefits of the automated assessment from a Freddie perspective is to get Freddie's view on it, is helping with that bit to decrease the defects and the reasons for buybacks, and especially if you get representation once you relief. And of course, there's just less volume, so it's going to be more dollars per loan. But the idea that tech and like the asset report, which is so versatile, is helping with cost, is borne out in the data. With we looked at it in different ways using a lot of our digital tools. But if you look at just the part where you're looking just using AIM, which is what we're talking about here, there's an increase of net production revenue of about 1.5 million per year. That can quadruple, by the way, if you use some of our other digital tools. But if you're using just AIM, you have that, and so that's from a cost perspective, because it's saving you days, and then also it's saving you man hours, because what we're doing is you're automating it, and there are certain those check marks that we had in my part of the presentation. You don't have to do this, you don't have to do this, you don't have to do this. If you get rep and warranty relief, there's a lot of things you can either push aside completely because we've done it for you, or change to more of a junior underwriter where someone doesn't have as much experience, needs to look at it, just kind of a check at the end. And our study found that we'd save about $200 per loan if you use AIM to save that time and to kind of offset some of that work. And the reason why is just because of the power of the technology these days, right? And to piggyback off what I heard before was about lenders who use this most efficiently. I think it is really important to understand your certain position, right? Where are you from a technology journey? Maybe it's not a wholesale change right away, right? Maybe you institute it bit by bit. And I think that's been the change in my mindset, at least in the cost to originate study, also shows that if you're making those little changes, it can help you on your journey. I completely agree with mapping everything out and getting to an ideal waterfall. That's super important. But if you can't get there on day one, maybe a first step is a pilot with, for example, an asset report, and you try to get buy-in from your people And so that journey looks a little bit different for every customer. Of course, if you can do everything at once, that's great. But you really have to take a look at your specific circumstances.
Excellent. Thank you, Louis.
Yeah.
I'll stay with you for another question. So you do have the opportunity to see cost efficiency and loan performance across all the lenders that you do business with. What are some best practices of top performing lenders when automating income and assets?
One was already named, but I think it's really important. Buy-in from your employees, and you'll get it from your borrowers. It's super important. But whoever is starting this journey with you, whether that's a whole branch or maybe your whole sales team, they really have to understand what the value is. Because if they aren't bought in, they're not going to use it. Related to that is kind of not giving them the option to use it. Once you've picked a vendor and a flow that works for you, if you've decided that this is the way you're going to go, you really kind of have to want to push them towards that direction. So you want to get their buy-in because they want to see the value. But if you leave it up to each individual loan officer, if that's your model, you're not going to get the transformation that I think is going to save you the big bucks. So that's one of the best practices. Also, kind of researching what other vendors are out there, like the account check product. If we have too many vendors that are used by too many of your sales team, maybe you have to rein that in, just from a cost perspective, right? You really have to consolidate, especially in this market. And staying up to date on the changes when you are using an offering, like these changes that we've done for AIM that I mentioned today. Some of these are less than 2 years old, which means we're consistently changing, innovating, making it better. And those are saving you time and money. And where we're in respect of our journey so far, which will help lenders, is we're automating what can, and reps and warranties was a great place to start. There's value there, of course, for you, but now we're trying to get to some of the real pain points. How can we get rid of this, and this task to save you on the day? So maybe it's not a whole rep and warranty that we're introducing, but it's hey, you don't have to do these 4 things anymore. We're done, check mark. So I think you really want to stay up to date on those changes because there's some exciting ones that have come and are coming.
Excellent. Cheryl, you also have the benefit of seeing all the lenders that use your services. What is the average adoption rate for using the VOA service?
So overall, we're seeing about 60%, but those companies that have best practices in place are up to 85%. And as we've all been saying, it really comes down to educating, the people who are initiating this, educating the borrowers, and getting everybody on board. And truly what I'm seeing too is a lot of these companies are choosing to do a monthly refresh on the services, on the products, getting in front of their originators, their processors, who's ever in charge of this flow, and keeping it top of mind, right? And putting processes in place. It's very simple, and people love checklists, and really incorporating that into their process is very effective.
Excellent. So just a couple more questions here. Louis, do sellers, servicers need to sign up with Freddie Mac to use these services? Do they need to complete something to use the services?
No, you'd want to sign up with one of our partners, like Informative Research and the Account Check product. And then the big part is submitting that report ID into the LPA submission. So you'd want to look at your LOS, POS, however you're pushing that kind of reference ID forward, whether it's integrated and how it's going to lay out in your process. But Freddie Mac itself is just doing the automated assessment. We don't control any of the contracts or anything that you have with any of our partners.
If we sign up with an automated asset vendor, we'll have access, LPA will have access to everything: rent, cash flow, PVC, to income, and assets.
That's right.
Excellent.
That's right.
And then Louis, Cheryl, or anybody else that on the call, what, if anything, is on the roadmap for automation coming down the pipe?
I think for us, I just said it out, expound a little bit more on it, is how can we check some of the boxes that you all have to do from an underwriting perspective? we are looking at, for example, undisclosed debts, talking about the asset transaction data. How can we automate some of those? I know that's a pain point for some customers. We're looking to expand data sources and coverage, right, to make sure that we can get as much automated from an income and asset perspective. So that's kind of been a journey for us. So those are the two big ones.
Yeah, undisclosed debt, I don't care how many times you tell them not to go buy a car, they do anyway.
Yeah.
Yeah, and I think from account check and the vendor's perspective, I mean, we're parallel very closely to what Lewis said there in terms of increasing the scope of coverage, being able to bring in more data from investment accounts is clear as well, so that they can be better used for satisfying the asset perspectives of the loan. And then kind of working with the automated underwriting systems as they begin to expand their API capabilities for providers like Account Check to be able to very upfront, as the other Brian had mentioned, very upfront in the process. We're getting that asset data. Now, what are we going to do with it? Okay. Before you've even built the entire loan package to go against LPA, let's go and see, hey, do I have enough information here to be valid for income validation? So using a solution that Freddie's coming out with called AIM Check, that would allow us to take the bank data, run it against Freddie, say, yep, you're good for income. And now what that allows providers like Informative Research that aren't just focused on asset, but are focused on really the entire verification pipeline, is adding decisioning to the lenders, automated rules-based decisioning to the lenders that says, hey, we validated income for this person. You don't need to order a work number. You don't need to go out and pull payroll information from a payroll provider like Account Check can also provide, and give that decisioning up front, making it easier for your borrower, shortening the time to close, and most importantly, reducing the costs that you have to spend. And then also knowing up front, hey, the data's, maybe it doesn't pass for initial income, but I've got enough data here that it's going to work for 10-day pre-close verification. So now I don't have to flip it into a call center to validate employment right before close. I can simply run a refresh on that. So it's not just within the context of how do I get more and better data from financial institutions, but how does this better operationalize across the entire origination spectrum of getting to close faster and to close cheaper for the lender.
Excellent. I don't want to take away from anybody's question or attendees' questions if somebody has this, but I have one I'm curious about. How do you, Freddie Mac, detect child support from an asset statement?
So
Is it-
we're looking.
No, go ahead.
Sorry. Well, so generally our process is to take two basically data sources. It's the verified data that like Account Check is providing to us, which shows the direct deposits coming into the accounts. And also it's the information that would be stated by the borrower, so that application information, to kind of get a cohesive picture, because there are deposits coming in. What are they? The application tells us what the borrower is saying is there, and then we're looking to see if we can confirm or deny some of those things. So, and then based on the account description itself, because once we get to the amount, we can look at the account description. We can see if those deposits there makes sense, and then from there we are able to assess income and get kind of a steady income stream that we can basically recognize in LPA. There is an additional requirement, like a tag-along requirement. You do have to provide that agreement as in documentation in a loan file. That just helps us get comfortable from an auditing perspective that we found the right one.
Okay, so if that deposit was from Venmo every single month, you would be able to detect that. It wouldn't care how the deposit was completed. I'm just curious.
Yeah,
yes,
it's possible. Okay. That's correct. That's right. It'd have to be consistency.
Consistent.
It's history, but yeah.
Okay. Thank you, everybody. I do not have any more questions for the panel today. Thank you so much. Debbie, I don't know if we have any questions from the audience, or if the audience has any questions.
We do have questions from the audience. Yes. So right now, and if you've already answered them in one form, just let me know. But how does direct deposit work for overtime and commission income that varies greatly? Oh, that's a good one.
Yeah, so we take advantage of the long transaction history that we are able to get. There are longer minimum histories required for that fluctuating, that variable income and fluctuating income. And we look at the net deposits and develop a steady stream from that, and then do a gross up. And we look at, again, the transaction history and also the application information. It is all about what the borrower is saying they're using to repay this particular mortgage. And that's what kind of we're on the lookout for. We're able to put that information together and form a cohesive picture. It's the gross up, I will say, is more on the conservative end, just because we don't know what the exact number is. So we have to get comfortable with that. But we're very successful at finding this type of income. And then to piggyback off this, because it got me thinking, is I know there's a lot of conversation questions about fluctuating income, not just variable, not just OT and commission, but the fluctuation in the base. How do I feel comfortable about that? That's one of the advantages of our assessment too. If the asset report is able to assess enough for rep and warranty relief, we will only give you that eligibility if we feel comfortable that you've passed all of our checks for fluctuating income. So in other words, if you get that rep and warranty relief, then you don't have to do any more fluctuation checks. That part has been taken care of for you, because I know that's a big. I've been asked that fairly recently.
Wow.
Can I ask a question piggybacking on that? So in your findings, you'll actually list the amount of income that you come up with too, correct?
No, for our LPA feedback certificate, if you get rep and warranty relief, we tell you that you get rep and warranty relief. We don't necessarily list out the derived income. And the reason that is because we feel that we found enough based on our assessment. So we're giving you the thumbs up. And then that also, from an operation workflow perspective, that means you don't have to go back in and look at any amounts that we may have calculated and like change any of the loan stuff. Like, we give you the thumbs up, you're ready to go. You don't have to change any.
Thank you, because that comes up a lot.
Yeah, sure.
Does that have any impact on your HMDA data report for income that you used? Probably not.
Well,
I shouldn't ask that.
Well, so remember what AIM does is derive income for rep and warranty relief only, not saleability, not any of the other regulations, right? So that's all based on the LPA submission. So just that, and that's an important point, and I didn't make it. If for some reason we're not able to assess enough for rep and warranty relief, you'll get that not eligible shield in the feedback certificate, but that doesn't mean you can't sell us the loan. That doesn't mean that at all. That just means from an automated perspective, we couldn't get to the income or asset amount. You can certainly verify it using our guidelines in a more manual way. Sometimes you just have to do a little bit more work, right? You have to justify that very big recent increase or that promotion that we're just not going to be able to do from an automated perspective looking backwards.
Okay. The next question I see, and I think we might have touched on it, but I think it's important that we reemphasize this. Does the 10-day pre-close verification require borrower involvement to reauthorize with your account credentials?
Yeah, Debbie, that's a great question. And in the vast majority of cases, it does not. So when we configure the lender that's going to use account check for 10-day pre-close verification, one of the things that we ensure is that their refresh period, which is the period of time that starts when the borrower connects their first account and generally goes until the end of the origination period. And during that period, the lender can come in at no cost and refresh and update for the verification of asset report. The borrower can come in and add another account, and then that 10-day pre-close verification can be run. So what we ensure, one of the questions that Cheryl and the onboarding team ask is, what's your normal origination time? So it's like, hey, we're generally taking, let's say we're doing 58 days to close. Then what we'll do is we'll set up a refresh period that gives you 90 days of time to be able to refresh that. And then either through automated service ordering inside of your LOS or through manual interaction. When that loan originates in funds, you can go in and can close the account check report. If it reaches the 90 days, we go ahead and automatically close it. But during that refresh report, we ensure that the data can be refreshed, and that includes generating the 10-day pre-close report. Now, if there is an instance where the lender requests that report and we do get a multi-factor question, that's where account check will automatically reach out to the borrower, ask them to refresh their connection, and then that will allow the report to be automatically generated.
Great. We have some great questions coming in, by the way. So this is one for account check. Is there a cost affiliated using account check, and does it integrate with Encompass?
So yes, there is a cost to using account check. It is a transactional product that is for unlimited. So each borrower, you would order an account check report, and they can connect as many financial institutions with as many accounts as they have. If you have a co-borrower on there, you order a separate report for that. And we're integrated with over 100 different LOS, POS, and credit systems. And we're integrated both with Encompass and with Encompass Consumer Connect.
Nice. Okay. Another question, good one. What about a borrower who has direct deposit going to more than one account? So for instance, including 401ks.
Yeah. I'll take that one. Link them. We can evaluate going into investment accounts. I'd have to check if 401ks is applicable, because gets a little that's a retirement account versus another investment account which you may be able to draw from. But we can link multiple accounts, I think is the question. We can link multiple accounts to be able to get a complete picture of the amount. And also if you've changed jobs as well, we can link that as well. But that goes back to telling the borrower, one of the biggest issues we have, like a fallout, we call it, is because they don't link all the accounts. Because I have multiple accounts, so I'd have to link all of them, and I have to remember to link all of them. Is your borrower going to do that? I think that's where the education piece comes.
And Louis, can I just mention, for account check, is that when the borrower goes in, it actually will list the accounts within the bank itself so that you can link those accounts and then add new FIs on top of that. So it does give you the option, click this account, so.
Awesome.
Nice. All right, we have another question. So the IRLA will show the gross income obtained from the applicant, and then Freddie, the automated asset calculates another income based upon pay. Does the lender then need to adjust the IRLA for the final 1003?
No, with our product, no. We've calculated enough, and we feel confident that it will get to the amount that we need for a rep and warranty relief. There is a threshold, right? You can't have application income that's $1 million, and we calculate much less than that. But we feel that you're within that threshold, and we've calculated enough for my end. So if you have like a Happy Path loan, you can just have the report ID from account checks, submit that, we'll assess, we'll give you the rep and warranty relief, and you don't have to go back into that loan.
Can I chime in on one portion of that? Just something up front for the lenders to consider. If you're trying to, say, do rent analysis, make sure you are looking at the verification of asset, and whatever rent amount you're showing coming out, make sure you're lining up your IRLA on the IRLA, part 1, where you're putting in your rent before you run your AUS, to make sure that those are lining up.
Good point. All right. So then no one is going to come back at you saying, oh, can you have them re-sign that application because the income doesn't agree with what we used for underwriting? So you're not going to have any of those problems, which is great. Sarah, I think I see no more questions in the Q&A, unless we want to give it one more minute. If anyone has any unanswered questions, you can put it in there, but if not, I'm going to report that the Q&A is clear.
Okay, thank you. I thank you again, the panel, today for speaking. I know that I did learn some new information today that I did not know before, so I think that, I hope others did as well. I think this was a great opportunity to get together and talk about, the expansion of automated assets over the years, that it's not just about assets. I think that it's very helpful, and, if anybody has any last minute words, I think that we can wrap up our session here today. Hearing none, I will again say thank you very much, and I hope everybody has a great day.
Thank you, everyone.
you all.
Especially thank you to the panel.
Everybody.
Thank
Thank
you.
you.
Thank you.